Good afternoon, everyone. Good afternoon, everyone. I am CA Forum Shah on behalf of Women and Young Members and Excellence Committee of ICAI. It is my pleasure to welcome you all. This is Yashashwini Idol Wednesday series conducted by women for the women chartered accountants. This series is a continuance of the Sky High Symposium, which has successfully completed 100 episodes. The key initiative of this committee has primarily two major objectives. One is to enhance our professional and non technical knowledge, and another objective is to sharpen our communication skills so that women chartered accountants can express their ideas clearly and impactfully on professional and public forums. Let us now move forward with our topic for the today is the RERA compliance regulatory versus reality. So topic I want to introduce CA Sakshi Agrawal for the speaker of the today. She is a chartered accountant as well as a company secretary and LLM. She has a rich experience in tax, audit, compliances. She holds more than 25 certifications and she has also empaneled as a mediator and arbitrator, while she is also actively writing and speaker on emerging legal and financial topics. With this, I warmly invite CA Sakshi Agrawal to take the session forward. Thank you.
Wow. Thank you, Forum, for such a warm introduction. First, let me share the PPT. Yeah, is the screen visible? Oh, good afternoon, everyone. Thank you, Forum, for such a warm introduction. So, I'm excited to talk about how RERA often looks great on paper, but reality, one second. But reality can be very different. Think of it like a balancing a seesaw. On one side, you have the law that promises the trust and transparency, and on the other side, you have what actually happens on the construction side and in the back office accounts. So my goal today is to walk you through the regulations versus the reality gaps and share the practical tips with you and tell you the real stories so you can feel confident advising the builders and protecting the home buyers. So let's begin with imagine one of your client is a young first time home buyer. Let's name her as Neha. Neha is full of excitement. She has heard that RERA will keep her money safe in escrow accounts and that the builder must follow strict timelines. In fact, RERA promises the things like the full refund with the interest if the deadline skips, and it even requires an escrow account. So that 70% of what the Neha or such home buyers pays goes only to that project. But when Neha pays her advances, her builders suddenly misses the deadline and the progress reports doesn't come on time. So now the home buyers like Neha starts wondering, is my money really safe? Is this flat ever get built? Will this flat ever get built? This scenario captures our whole theme, that is the RERA's vision is buyer friendly and strict. It aims for transparencies of transactions, timely disclosures, ring-fenced funds, and enforceable remedies. But the ground reality is the messier. So the project gets delayed without penalty. Funds sometimes get diverted to other schemes. Forms and reports goes unfiled. Portal data doesn't match with the builder's books, and so on and so forth. So today we will discuss these gaps. I will explain the law in plain language and then tell you the real life examples, like the Neha story I will discuss to make it tangible. Think of it as a lecture, but a friendly story sneaking in the end, you will see how CA rolls is like a bridge. Steadily, the seesaw when the builders stumble and giving the home buyers and other buyers the confidence that we have got their back. So let's start. Let's start by clearly outlining the RERA's promising versus what often happens. The law is written with an idea that trusts through transparency. Escrow protection for funds, strict accountability with regular reports and audit, strong buyer's rights, like a clear remedy if things goes wrong. For instance, under RERA, builders must hold 70% of all the buyer's payment in a separate escrow account for the project. They can only withdraw funds as building milestones are certified by the engineers, architect, and the CS. Also, RERA guarantees the buyers a full refund with interest if the project is delayed or cancelled. Buyers can access the progress report, financial disclosure, and even file the complaints easily. These rules were designed so that the home buyer would feel the law is protecting their dreams. Now let's picture our reality check. That despite these rules, many builders push the completion deadlines again and again, sometimes without any penalty at all. Sellers find the loopholes or the delays. Buyers, like the above one, Neha, in our case, often end up waiting much longer than promised. Worst case scenario is that some developers divert the fund to other projects also. For example, using the fund from tower number A, collected from tower number A to build up tower number B. This is strictly against the 70% rules, but it happens. In one of the recent examples, a state regulator added a portal feature to let the buyer flag the funds divergence online. That shows that the problem is real and massive. It is not unheard of for the builders to report an inflated quarterly progress on papers and withdraw the funds. When on ground, very little construction happens. Essentially, the photoshopping progress to get the cash. Also, you might find that numbers in the builder's RERA portal doesn't match with the books or the GST filing. Now imagine the home buyer like Neha logging on to check the progress only to see the outdated or missing entries. In this, a friend of mine helped a client whose project was years late. The builder had promised a park, a gym, everything, but on the visit of the site, there were still holes in the ground. Here, the home buyer's confidence trembles. They wonder if the people lies about the progress report or just forgot to submit the forms. The law clearly states that this must be done regularly. But in practice, many builders treat them like an optional paperwork. Regulators authority even report that up to two-thirds of the registered projects haven't filed their annual audited statements on time. A standing lapse, isn't it? This gap between the legal blueprint and the muddy construction side is what we are focusing on. As a CA, we get to be a detective and advisory here. We have seen the builder who sincerely tried to follow RERA and other who filed the late or flunked numbers. So our job here is to hold the balance so that the home buyers like Neha trust the guides. We translate the laws into reality. For her, it is a peace of mind. For builders, it is smooth compliances. So we will unpack the detail now, starting from the registration all the way to accounts reconciliation, always remembering that the human side behind each forms and numbers. Now let's take to the compliance roadmap. As a CA, you will frequently help the builders navigate the RERA compliance process. Think of it as a timeline of checkpoints. With specific forms at each stage, I like to compare it to launching a flying a plane safely. Before the takeoff, you need the clearance. During the flight, you monitor the system, and upon landing, you review the logs. So, RERA had a similar procedures. So, first one is the Form 1, that is the architect certificate. This is like the green light before you register the project. The architect certified that the plans are approved by all the authority. Only with this, the builders register the project with the RERA. It is a blueprint approval stage. If I were advising a small developer client, I would say that make sure that your architect ticks this off before you register, or RERA will reject your registration. The second form is the engineer certificate. This one comes soon after that. The engineer certified that the construction is structural sound and following approval specs. Imagine it has a mid-flight safety too. The engineer checks in that yes, the foundation is poured correctly. A builder called me saying that he started a construction, but he realized that his form 2 was late. So I explained this that he must certify before significant construction. Otherwise, withdrawal from the escrow can get blocked. The third form is R form, CA withdrawal report. Now, this is the spotlight. It is a document that you will sign as a CA every time the promoter wants to withdraw the money from the escrow account. In simple terms, we can say that whenever the builder has completed a quarterly progress and need funds to keep the building, they come to us. We must verify the quarterly progress report and ensure that at least 70% of the funds in escrow has been used only for that project so far. So Form 3 is basically saying that I certified these funds are genuinely being applied to the constructional milestone claimed. It is a big responsibility, right? Which reminds me of a story where I once had a builder ask me to sign the withdrawal form. But when I visited the site, the promised wings of appointment was just foundation. The quarterly progress report looks inflated. So I refused to sign until they corrected the report. It turned out that it was a genuine misunderstanding of where the progress was. After everyone got on the same page, we did the funds release proper. Now, the fourth form, that is the project extension request. If the project is delayed, maybe due to monsoon or maybe due to labor strike or whatsoever it may be, RERA says that the builder must file Form 4 to seek an extension of the timeline. This is like asking for an extension on an assignment, but it comes with a scrutiny. The regulator will want to know why it is delayed and whether the money was spent properly or not. For example, if you are advising a developer who is falling behind the schedule, tell them file Form 4 quickly along with justification, or there will be a risk of a complaint or even a higher scrutiny of your escrow usage would arise. The fifth form, that is a Form 12, annual statements of accounts. Consider this the project's yearly tax return on an audit report. Every year, a CA must audit and certify all the receipts, payments, and closing escrow balance for that project. It is the final big picture check. If Form 5 isn't filed on time, RERA is ruthless. In this, the portal can freeze the project and future withdrawal immediately. Builders whose Form 5 goes missing find their project's registration suspended. So, as their CAs, you have to push annual filings like a train conductor pushing behind ahead. Why does this matter? Because at each step, we as a CA are not just filing the PDF, we are verifying the trust. Each signature we give on Form 3 or 5 says to the government that, yes, these figures are accurate, and says to the home buyers that this project is on track. So if I think back to that Neha story, imagine how upset she would be if none of these checks happens and the project vanishes. As her indirect advocate, we must ensure that each form is filed on time and trustfully. And we teach our developers client that these forms are not just paperwork, they are the certification of credibility for their projects. Now let's move on to the ground reality. So now let's push back the curtains and talk about the common place where the builder slips up and how that impacts us as an advisor. Even if the law is clear, in practice, builders sometimes treat it like a checklist to tick just before an inspection rather than the ongoing discipline. Here are a few of the red flags that I have seen in my practice. The first one is that non-filing of Form 5, that is skipping Form 5. Many builders procrastinate this. They might say that give us time. We are busy, but the regulator don't wait. If the Form 5 isn't filed by the due date, the state RERA portal can freeze the project registration immediately. There were times when I had got a call midnight on March 31st from a builder because the RERA was about to block his next quarter funds withdrawal. I reminded them that the moment our CA didn't certify the annual report, RERA effectively labeled the project as non-compliance. The result to this would be that no new sales, no receipts, and the bank account was at a risk of freezing. So the moral here is that Form 5 is not negotiable. The second ground reality is the escrow accounts misuse. The law says that 70% of the money goes in the escrow and you can only use it for that project. But in reality, some promoters diverse the funds to other projects or even unrelated expenses. It is like taking your travel savings and spending it on your new smartphone. It is clearly wrong, right? So, as a CA, we must insist on a deep audit of each withdrawal. Like, show me the invoice for the construction expenses exactly equal to the escrow release. If a developer tries to justify a withdrawal because we need it for the corporate overhead, then this is a huge red. The third one is the fabricating the quarterly progress report, that is QPRs. Sometimes the builder just filled up the QPRs on the last date, plunging the milestone. Perhaps the client asks us, why do we need a photograph of the site? Because in one of the cases I have found that the tower column weren't ever casted, yet the QPM says that 30% of the work was completed. A gap between the report and the reality means that your Form 3 signature would be certifying something false. We have to be extra cautious in this, for which I tell clients treat each QPRs as if the auditor is standing on the side for verifying it. The next grand reality is the portal versus the books mismatch. It is not uncommon for a RERA portal data to show, like, say, 5 crores collected, while the accounting book says 6 crores collected. So sometimes the GST return shows a different revenue figures altogether. So this mismatch are tiny tricking bombs. They caught once the builder when the buyer's group pointed out that the portal claimed lower sales than the GST return, implying a ghost transaction. So for us, it means the triple checking that any bank receipt must appear in the portal and vice versa. Even a cancelled booking must be reversed in both RERA portal as well as the GST records. For instance, in the Maharera, it has been very strict. They even published a list of defaulters, suspended thousands of projects, and frozen the bank account. While on the other hand, the UP RERA recently enabled home buyers to report the funds diversion with a click. But some states like Telangana have been slower, which is unfortunately means that the risks are lingering. So if you work in Maharashtra, you can warn your builders that we can't ignore any form. The regulator is actively policing all the filings. In UP, at least the buyers can now whistle blows on the diversion, which hopefully detect the misuse. So in short, I tell the CA that you view the lapse as a cautionary tales and also as a liability trap. The law may promise the transparency, but if the builders ignore it, the fallout is real from the portal freeze to the penalties. So our job here is to foresee these pitfalls, which remind me of another client story where an honest promoter asked me once that is it okay that we register the expense of a two projects under one project code? I said that no, that is like mixing two recipes in one pot. So, if the regulator sees that, they will suspect the friction. So, we enforce segregated account for each of the projects. Later on a surprise, Maharera audit picks up the same project for scrutiny. And we proved it to be clear. Our project has no diversion. It has worked well. And it has avoided a bigger trouble in this. So, moving forward, now let's switch on the gears a bit Now let's talk about GST. That is another beast that often intersect with RERA in a complex way. The developers and the buyers both feel that the GST is pinch. So understand it is very crucial. I like to break it into the 3 parts. First one is the RCM. The second one is the block input tax credit, and the third one is the tax on the booking advances. The first one, the reverse charge mechanism, that is the RCM. Some suppliers are taxed in an unusual way. The buyer has to buy the GST on the purchase of certain goods or services. For real estate, one example is that of a cement or a capital goods bought from an unregistered dealer. If a developer purchases the cement from a small supplier who isn't have a GST register number, then the developer has to pay 28% GST directly by the RCM rule. In effect, the developer becomes the taxpayer for that supply. Think of it like how normally a restaurant owner collects the GST from you and it remits it. But if you go through a takeout app, sometimes you might pay the GST directly to the portal. Here, the app is us, the developers paying on behalf of the supplier. It's a cost that the builder sometimes forgot to account for. I once have a builder who only counted the material cost, ignoring this. We had to do a GST revision to catch up on the RCM also. But trust me, it is very hard lesson. The second one is the block input tax credit. This is one of the biggest headache. Under Section 17(5) of the CGST Act, the input credit on the construction services and the construction of an immovable property is disallowed for developers. It means that the most developers can't claim back the GST paid on their construction related purchase, so that the tax becomes the net cost. In fact, a 2025 tax amendment explicitly declined the ITC even for the commercial leasing projects. So, in everyday terms, if a developer pay 5 lakh GST to the supplier, he can't reduce his output tax liability by that amount. So, under construction, non-affordable apartment has to be taxed at 5% with no credits. So, what does that mean? The full tax on the bricks, cement, labor becomes a part of the cost structure itself. So, often passes on in the pricing. So, one of my builder's clients says that GST is a pure pain. It is not like existing my tax. It is an extra expense to altogether to me. And indeed, because of this rule, the developer's margin gets ripped. So remember that any expected GST refund on construction is essentially blocked, which is why the buyers sometimes feel that they are paying tax on tax. The third one, the tax on the booking advances. Here is another trap, the timing of the GST. Under GST law, any payment for services received is considered as a supply at the time of the receipt itself. But in housing, where a buyer like Neha, in our case, pays in advance, say 10% of the flat price, GST is owned right there, even if the possession is away. But why? GST is time of supply rule for services, makes the moment of payment taxable. So even if the sale deeds or the conveyance deed hasn't happened, the developer has to issue the invoice and pay the GST when he takes the booking amount. I always stress this to the client. Don't think that I will pay the GST later. No, not at all. Once the check landed, the GST department is waiting. Otherwise, the mistake happens when the developers takes advances but forgot to pay the GST promptly. And the tax dues piled up with interest and so on. So once the builder learned that this hard way, where a small town builders were penalized for not declaring the advances on time. So again, early planning is key here. Every advances need immediate tax treatment. It is not a freebie. So GST in real estate has been called a maze for a reason. It is good in that it is unified many taxes, but it is bad because certain credit rules make it expensive. Some credit is even fully blocked now. And the blocked part literally means those credit vanish into the lithium. So our role here is to help the developers navigate this maze and advise us on how to handle the RCM purchase, make the proper entries for advances, and manage the higher costs due to the block ITC. So in this, I often tell the developers that factor GST into your estimate from day one only. Has and consider it and consider it as a construction cost line item only, because most of it is right. So next, let's move on to the regulatory intersection. Now let's focus on a tricky crossroad at RERA versus GST rule and where they might clash or overlaps in the real estate projects. This is where the CAIs must stay sharp because one of the misalignment can cause the big headache down the line. I will walk you through a few of the scenarios, like the RERA 10% cap, GST on the first rupee, Form 5 reconciliation, and so on. So the first one is the RERA 10% advances cap versus the GST on first rupees. Many states' RERA law includes, like the UP one, says that no more than 10% advance before signing the sales agreement. The idea here is to protect the buyer from paying too much upfront. But let's say a developer receive exactly 10% and proceed to sign the agreement. That sounds RERA compliant. But GST doesn't care about 10% rule. It taxes as soon as the advance is received, even at 1% or 10%. GST is due immediately. In practical, this means that the moment the builder rings in that the first check, he has to pay the tax. A classic misunderstanding which we have taken up here is that the builder in UP once held that on invoicing and advance, thinking that he was still negotiating the agreement. I explained him that GST law doesn't wait for your handshake with the buyer. It taxes the cash the moment it is on table. Even at the RERA cap 10%, the GST on the 10% or even 1% is payable on receipt, not on completion. The third one is the triplet reconciliation. That is the Form 5 versus the books versus the GSTR 3B. At the year end or the project end, the accounts must sync in harmony. The total sales book on the RERA portal, the accounting books, revenue entries, and the GST return numbers must match perfectly. For example, suppose a booking was cancelled. RERA says that you have to refund the buyer and exist Form 5 statement. GST law says that you must issue a credit note and adjust your GST 3B liability. If any one of this step is missed, yet you get inconsistent. Perhaps the book shows a cancellation adjustment, but the GST return still shows the original sales, creating a tax mismatch. Or the RERA portal was never updated to reflect the cancelled booking. So the portal shows more advances collected than what in the bank statement. As a CA, our strategy checkpoint is that we should cross verify every advance received across all the three registers. If the accounting team says that we booked 50 lakhs in this year, but the RERA says 45 lakhs after cancellation, then that gap screams like audit time, please. Now let's move on and check the common reconciliation failures that happens. In practice, I have seen a few recurring issues that the developers sometimes forgot to pass on to the GST credit note when a flat sale is cancelled, which is a problem. Other, Others use cash accounting for RERA. The only update portals on receipts, but the book recognizes some revenue on an accrued basis. This caused a timely mismatch. That's what a reconciliation nightmare until we align them. So it is vital here that the CA level is in detail. For every advances the builders take, ask, did you pay GST? Did you record it in the books and entered in the portal? If not, put up the warning flag. Usually I say it to the developer. Think of your GST 3B, RERA, Form 5 and bookkeeping as an holy trinity of the compliance. All the three must agree or you are in trouble where the regulator comes knocking at your door. So let me illustrate this with a client's conversation. I once asked the developer, have you reversed the GST and all the cancelled booking in the returns? He bluntly said, realizing that they issued refund to the buyer but never amended the 3P. We quickly fixed it because NAA would view that this is profiting. Another question I ask is your GST matching the cash flow at each project? If not, someone's eggs are missing. So in short, coordination and timings are key. BCA must bring together the RERA compliance team, the finance team, the sales team to make sure that one work doesn't undermine the other. Now let's take up a case study. So we have talked about theory, the general examples, and all that. Now let's look at a real enforcement wave to see the state of Maharashtra, the largest market that has been particularly aggressive in recent years. I have recalled later in 24-25, Maharashtra has identified 10,000 projects that has gone silent. No fresh timelines, no extension, no progress update, nothing. By August 25, they have suspended 4812, if I'm not wrong, projects and frozen their bank accounts. That's nearly 5,000 developers' bids, halted in one swap. For perspective, that's like taking the entire city under developed project and slamming the bricks. This project can't sell another flat or sign a new agreement until they fix the compliance issue. Now imagine being a CA for one of those suspended projects. So for that, one day the builder called me and told me, I got a notice. What do I do? The answer to his question was very urgent, was very obvious that file all the overdues, Form 5, QPRs right now. Resubmit your timely extension application and coordinate with Maharera to lift the abeyance. The clock started ticking. Until those forms were certified and uploaded, the bank account stayed frozen. From a CS angle, this was a clear message that no form file, no trust, no business, no exit. In fact, Maharera has reportedly said that 60% of the registered project has failed to file their annual audited statements on time in 2025. That is almost two-thirds of total projects, illustrating that even big players were dropping the balls. So, along with the suspension, Maharera has also slapped the fines too. The developers who didn't file updated has faced penalties up to 50,000 per instance. In total, the state regulators had run up the cumulative penalty in hundreds of crores across the projects. Though we can't verify the exact amount, but I guess exactly 2,400 crores number was here. It has been widely reported that the fine has been very substantive. Many builder has to pay hastic sums or face expensive bans. So, what are the key takeaways for us as a CA in this case? The first one is proactivity. For example, before signing any withdrawal certificate, you should check the portal to see that if the project is in abeyance or not. Because if it is suspended, signing anything would be certifying a lie and inviting a regulator's anger. The second one is reinforcing to me that we need to cross check the escrow and the bank statements often. If a builder's portal says no withdrawal, but we see money moving out, that would raise an alarm bell to ring. One of the CA friends told me that they have caught a 50 lakhs unauthorized diversion by reconciling the escrow ledger to the bank in April and catching a ghost withdrawal. She has said to me that if we hadn't done that weekly check, the money would have vanished and the regulator would never know about it. But we would have signed the CA certificate for that, right? So this is the crackdown. Also, smart builders' behavior change. Some start appointing dedicated compliance managers or using digital dashboards so nothing would slip. It is like a fire drill. Once you experience a suspension, you never want to go to it again. I advise all my builder clients to keep your Form 5 ready week before deadlines. Don't glamour on it. So we can say that Mahadara enforcement shows what happens when the regulator smells non-compliance. And advisory, we would keep everyone nervous in the right way. We should walk into the project saying that no delay is acceptable. Because once the regulator slams the door, it's months of appeal to reopen them. And during that time, no new income, no new income, interest accrues, buyers lawsuits escalate, and many more cases such like that. Now let's take the second anti-profiting watch case loss. That is the Clontaine Patil case. Uh, how the GST anti-profiting rule can affect the developers and the CEO. This part is about making sure that the buyer gets the benefit of any tax saving that the builder experiences. A memorable case that is Cloten Patil developer, a big Pune builder, they were charging home buyer 5% of GST on their apartment, which was legal. But they were also retaining the input tax credit benefit on the service, like the construction, rather than passing it on to the buyers. Under Section 171 of the CGST Act, the builder is required to pass on any benefit of the tax rate reduction of ITC to the buyer. In the Clontes case, the buyer complained to the National Anti-Profiting Authority that they were not getting the benefit of the GST input credit. Colton was aware. So the NAA investigated Court's book and found that the developers has realized an undue benefit of 67 lakhs by not lowering the prices to the buyers. The end result here was that the Cloten Patil was ordered to refund 67 lakhs with an 18% of interest in the effective to the affected buyers. So why is this important for us as a CA? The message was clear. If the client hides the ITC benefits or doesn't reduce the price accordingly, you can't stay silent. As a CA, our certification or audit report under RERA implicitly says that all is fair. So, if, for example, a builder uses ITC to fund the side expenses but didn't offer a corresponding price reduction, that is illegally profitable, and we would be complicated if we ignored it. I usually advise clients we must keep manipulating documents of how the ITC flows. If the credit is taken on construction service, it should be reduced, but the builder's GST liability to be passed on to the buyer via lower GST rate. In practice, I treat this like a dilemma and a responsibility. If a promoter tries to justify not passing the credit because GST rate stays the same, I remind them of a law. Also, our own work papers can help us if the dispute arises. Our notes and spreadsheets showing that how we compute the profit and tax will prove that we did our homework. In a Clontis case, the CS report would have been scrutinized if it didn't address the ITC benefit. So, a strategical takeaway here is that then when you audit or certify a real estate project, document every ITC. For example, we confirm that all ITC and construction and input supplies has been utilized in accordance with the GST law, and price adjustment, if any, has been properly computed and passed on to the home buyers. This shades you because if later it turns out that the builder didn't retain the benefit improperly, at least you have the record showing you raised the issue. I often say that if your client is hiding the credit, the CA cannot hide behind silence. So ultimately, anti-profiting aims to protect the end consumer. For the buyers like Neha in our example, it would be heartbreaking to find out that she pays more because the builder pocketed the credit. So we must side with transparency. The next one is the CA compliance dashboard. So upon us now, we have painted a picture of many moving parts. How do we keep a track of all this? Forms, QPRs, escrow balance, GST, timeline, etc. So one tool I recommended is a CA compliance dashboard. Think of it like a central control panel, like a cockpit instruments for a pilot, but for the project compliance. Imagine a spreadsheet or a software that leads each project by the name and the RERA registration number for each project. You have a columns like project name, RERA registration number, Form 3, Form 5, escrow balance, GST reconciliation, and a final red flag or uh, status sign. Every week you tick off the box. If Form 5 is filled, then this month marked as a tick. If it is pending, mark it as yellow or red. If the escrow balance is equal to 70% of the receipt, then mark it as tick. If not, put a flag on it. If the GST 3B versus RERA ledger matches, then mark it as tick. If there is a discrepancy, then mark it as wrong. For example, on the side, I have a mock table, sky view heights. Everything is green, green meadows. Form 5 is delayed, so I put it yellow. Metro center, portal is frozen, so I put it red. Such dashboard makes troubles obvious at a glance. In one case, I introduced this to a mid-sized developers group. They started reviewing it on a weekly meeting with their finance, legal, and project team. Guess what happens? Many small issues got fixed in real time. Those red flags means that one project has diverted the funds, another has missed the Form 5. Addressing them early saved far more than the time spent updating the sheets. Some practical advice for using such dashboard is that you should update it weekly and not quarterly. Compliance issues snowballs quickly. Also share it cross-functioning. That is, share it with the legal team, with the finance team, with the construction team. Everyone baseline should be compliance here, not just as a CA team. Lastly, keep an audit track that the note every change and date. If one week the project was green, the other week it is red, make a note like a cash outflow surpasses 70%, notify the promoter to restore the ratio or something like that. So this way, if a dispute or a penalty notice later on comes up, you have an evidence of your due diligence. The mantra here is that one dashboard, all doubts destroyed. It brings the disciplines. As a CA, having this tool helped me spot the builders have forgotten to issue Form 4 for an extension, preventing a suspension. It helps one of the colleagues to solve notice a small GST glitch before the authority has flagged it. Ultimately, it turns compliance into strategical advantage instead of back office course. It shifted the role from checking the boxes to guiding the ship. Now let's take the red flag and the strategical questions. We have covered a lot of the ground, and now I want to leave you with a game plan thing to never accept silently and questions you should ask every client. Think of this as a five non-negotiable and a tough client conversation that can save a project. The first one is the Form 5 zero tolerance. Never let the annual audit slip. If a builder starts making the excuse, push back. I tell my client that, Mr. Builder, neither we file Form 5 today or your RERA project is effectively suspended tomorrow. So it is that serious. The regulator will freeze the portal and the bank account instantly if it is late. So our action here would be to schedule your RERA audit monthly in advance, not on the 11th hour. The second one is the escrow deep audits. Don't just take the QPR's words or withdrawal. Reconcile every rupees. VCA types love saying that trust but verify. But it is like checking the sugar jar when the cookie jar is empty. You might find that someone has been sniffing in. So we required supporting invoices, construction progress photos for every disbursement. If something doesn't tied up, ask question immediately. I always remind myself that any unexplained withdrawals are like missing monies from the treasurer's chest. So keep an eye on that gold. The third one is a triplet reconciliation rule. RERA portal, accounting books, and the GST return must tell one story. If they don't, something is amiss. Many mismatches are not innocence. So whenever I close a project here, I do reconcile. I do a reconciliation exercise and highlighting any differences. It might reveal, says that the sale was booked in April, but the GST invoice was in March, a timely gap in it. So we then fix that in the reporting. Discrepancies should not be dismissed. has a rounding error. They are the red alerts warning. The fourth one is the advance versus the liability sync. Every advances payment must be tied to a specific GST entry and RERA cap rule. For each booking advances, check whether they have issued a GST invoice on time or not. Did they stay under 10% cap or not? If an advance is about 10% and they still accept it before agreement, the RERA violation is there or not. Check in the Act 2. So if the GST was paid on its receipt, if is not paid on the receipt, then it is a tax violation. So syncing this prevents two regulators coming after you in an opposite direction. The fifth one is a cancellation protocol. When a buyer cancels, it cascades through RERA, GST, and accounts. Yet the builder often handles it poorly. If a unit X is cancelled, we must raise a GST credit note promptly, refund the buyer, and then exit the RERA portal all at once. Otherwise, the buyer might overpay the tax or the developer might adversely break the anti profiting rule. So, our job is to insist on a simultaneous handle. Now, beyond the checklist, there are three pilot questions to ask the client that they can transform the compliance. The first one is show me your Form 5 and the escrow ledger today and not tomorrow. If your developers hesitate or says that I will get it tomorrow, the alarm bells ring. Delay often signals that there is something to hide or they are taking it lightly. Requiring immediate access proves that their commitment to transparency and your credibility as an advisor. The second question is have you reversed the GST on every cancelled booking in the returns? Many client has missed this. If not done, it must be constructed as a profiting charge, charging the buyers the GST but not giving them the benefit back. By asking, we force them to reconcile this cancellation. If they haven't, we will correct it. It's not only avoid NAA trouble, but it is a signal to them that we think like a regulator. The third question is, does your GST or 3B matches with the project's cash flow and the RERA filing exactly? If any pause follows, dig in. Reconciliation isn't optional, it is our shade when the tax officer and the RERA inspectors come calling. We can present our work papers to show that we have matched the receipt, refund, expenses, and tax. This single question covers a lot of the grounds at once. Finally, reminds the clients of a mindset that compliance isn't a cost, it is a credibility. And by that, we can mean and be compliant, build the trust with the buyers, financials, and even in your own team. The promoters is like the project CFO. He ultimately owns these answers. I close many meetings by saying that you are the CFO of this company and the compliance is your credibility metrics. Let's keep the metrics high. So, with this, thank you all for your attention. Remember that our role as a CA in Vera projects is power. We stand between the builder and the law, ensuring that one doesn't collapse onto other. We do this by being vigilant, by raising the right questions, and by solving telling, like I did in my case of the Neha, so the client understands why the rules exist beyond the papers. So now I'm happy to take up any questions of you. Thank you.
Thank you so much, ma'am. Ma'am, there is one question. In
Yeah.
Form 3, means of finance table F, in case of multiple projects under one entity, how do we derive availed unsecured funds for a particular project? In case of registration or correction application, we have received a query for a CS certificate apart from Form 3 for availment of unsecured funds, including the party names and amount utilized for project. How to draft the same?
Okay. Can you just repeat? Actually, the question was not clear properly.
May I repeat, ma'am?
Yes, yeah.
In Form 3, means
Yes.
of finance table F, in case
Yes.
of multiple projects under one entity, how do we derive avail unsecured funds for a particular project? In case of registration or correction applications, we have received a query for a CA certificate apart from Form 3 for availment of unsecured funds, including the party names and amount utilized for project. How to draft the same?
Okay. Actually, in Form 3, you have an option to just elaborate it in that, I guess in the table F only, you have there. You can just draft a reply for that, that we don't have any unauthorized funds or so that you can do it like that.
Okay. One more question, ma'am.
Yeah.
GST on full value or on advance value?
GST on
Full value or on advance value?
if the advance is received, then on advance value. Actually, it is on the receipt. It is on the receipt basis, no? So if you have
O-
received an advance of 1 lakh rupees, so you have to charge the GST on that 1 lakh rupees rather than on the whole the uh, value of the flat.
Okay.
Yeah.
There is one more question. Is
Yeah.
there any required certificate to do RERA audit or compliances? If so, please provide the details.
No, there is no required certificate for the VERA compliances. You, being as a chartered accountant, you can sign any Form 3 or Form 5.
Okay. What is the most common mistake a CA could make in RERA compliance reporting?
Generally, the mistakes I have mentioned, that we don't check the reality what it is doing. The funds, generally we sign the Form 3 or Form 5 as per the books, but we should scrutinize that each expense is done for that project only, because there are many cases where the expenses are done for the other projects or for any other expenses for their corporate overhead, and the same has been reflected for that project. So we should just make that in mind. Just take that into consideration. Yeah.
What if builder sale starts after completion? Is it 70% applies?
Builders, can you
What,
repeat them?
what if builder sales starts after completion? Is it 70% applies?
No, in that case, the 70% doesn't apply because the sale starts after the completion only. So he can review the possession. So the RERA Act is compliant in well in advance only for that.
Ma'am, one participant is asking, please summarize what benefits are from RERA.
Benefits for RERA. As I
Yes.
mentioned, actually, the RERA was having a benefits, but the loopholes the builders has taken into consideration. The benefit for RERA was that the buyer's right was protected under it. Then the project was kept for the completion on time. The completion date was kept for in time, and many other like that.
Okay. Who issues the completion certificate so that GST is not chargeable after completion of project?
The completion certificate of the project is issued by the competent authority, that is the uh, authority in that state or in that local authority. It is not issued by us. So once they get the completion certificate of the project, then the GST is not charged on the bill.
Okay. Thank you so much, Sakshi Agarwal ma'am, for the valuable session on RERA and answering all the questions so patiently and nicely. Now I invite CA Tanushree Patil to take charge for the next session. Thank you so much once again, ma'am.
Thank you.
Thank you, ma'am. Thank
Thank
you.
you.
Okay. Good evening, everyone. Myself, say Tanushri Patil. I once again welcome you all for the webinar series 91. I now want to introduce our second speaker, CA Dishita Sardhara. Sia Dishita is the head alliances cybersecurity with over 8 years of experience across banking, consulting, and startups. She specialization in strategic partnership, client management, and risk analysis, aligning cybersecurity initiative with business objectives. I welcome you, ma'am, and handing over the session to you.
Thank you so much, Tanushri, for the warm introduction. Yeah, I would like to thank you, WYMEC, for this great opportunity to speak at this forum. Is my screen visible?
Yes, ma'am.
Yeah. So, good afternoon, everyone. So, my today's topic is managing cyber risk in modern CA practices, from compliance to survival. So earlier, thieves came with a gun, but now they come with an email. So today, we are not going to talk about hacking in a technical language, but we are going to talk about our laptops, our emails, our clients, and our reputations. So cyber risk is no longer optional knowledge for chartered accountants. It's a survival knowledge. So, my dear friends, first of all, let's decide whether we fall in the area of cyber risk or not through these three simple questions. So I'll allow you a fraction of seconds because these are very obvious questions. So, like, are you using email for client communications? Do you store your client data on laptops or clouds? Do you use government portals over internet daily? So these are silly questions, right? These are our day-to-day tasks which we do. But through this, we are all inherently exposed to a cyber risk. We don't need to be hacked by choice. We are hacked by our default exposure of using the internet and the devices and portals accesses over internet. So now let's understand that what is this cyber risk? People always talk about cyber risk, technical risk, digital risk, and blah blah. So in simple CA words, like in a simple CA technical language, so cyber risk is the likelihood and impact of loss caused by failures or attacks involving digital systems, data, or users. Now, what is this digital? So anything and everything electronic and online, including data, devices, and networks and identities. This all are, we call it as a digital. So for us, what is at risk because of cyber risk for chartered accountants? So we are most trusted custodian of the highly sensitive financial and personal data. We handle money, identity, and trust, where data is our assets as well as liability. So if cybersecurity fails, the loss is not only financial, it is loss of trust, which is hardest to recover. But we still have a question that why we will be targeted. So because of our inherent risk, because we are like low hanging fruits for hackers, as ready made honey jar is for bear. So we store high value multiple client data, making a single compromise extremely rewarding for attackers. Centralized portal accesses like one CA login often controls accesses to many government portals for many clients. So this is an attractive single point of entry for the hackers for the huge data vault. Further, we also heavily rely on the email for most of our client communications and document exchange, increasing exposure to phishing and spoofing attacks. So here I'll just tell you one very interesting facts. So till now, so we have recently started working with the CA firms and we are creating cyber awareness into CA firms. And first point, we see that whether the emails of the partners and the management is secure or not, and in 80% of the cases the emails are not secure, it's not configured properly. So I am able to send an email of XYZ partner on behalf of him without any login ID and password, which is very critical item to run any consultancy or any kind of business, right? Then what are the why are we easy target? Because of our time bound compliance pressures. So filing deadlines reduces verification time, making us more likely to act quickly on malicious emails or requests. Many small and mid-sized CA practices like dedicated IT or security teams and advanced controls, leaving cybersecurity concerns at very corner of our offices. Common use of shared laptops, passwords, generic IDs weakens accountability and access controls. Using home networks and personal devices, increasing the attack surface because of unprotected Wi Fi and endpoint securities. And many a times, long-standing client relationships make impersonation and social engineering attacks more effective. Our staff often have broad accesses with minimal monitoring, increasing accidental or intentional data leakages. All these things build perception of low resistance for hackers. So attackers view CA firm as less guarded than bank or a large enterprises, but with equally valuable data. So why would hackers spend more energy hacking a bank when they can easily enter our practices, right? And cherry on top, हमको कौन ही hack कर लेगा mindset. So now let's try to change a bit this mindset by throwing some light on common attacks reported in past with few of us. So these are very common attacks faced by CAs or advisory or consultants into our industries, like fake emails impersonating income tax departments, GST personnels, MCA or RBI officers, ransomware attacks, insider threats, intentional or accidental, data leakages through insider threat or cloud tools or messaging apps, phishing emails and social engineering, which is very old and very hot in news, email account hacking, which I just mentioned, email account hacking through email spoofing, which is very common. So these are not occasional attacks. These are Indian CA firms attacks happening every week under our strong vigilance. So let's discuss this one by one. So first of all, let's discuss about fake email impersonation. So this I'm showing a real life example. So we have worked with one CA firm, mid-sized CA firm based in Ahmedabad. So the GST portal was not hacked. The CA was tricked. So the CA got email from official CGST website with penalty payment documents and the exact fabricated logo document design which looks so legitimate. Hacker had used domain spoofing to avoid any doubts over legitimacy of this email. So what is domain spoofing? So it's like changing the domain name with unnoticeable variations so it looks legitimate. So this is an example which I would like to show over here of domain spoofing. So can you see the email is from Microsoft, and you can see the no reply at microsoft.com. But in reality, this is not microsoft.com. If you look at from near, so this is R and N. This is not M. So by using this fake domain, the hacker had cheated or hacked the CA. So, and due to some pressure, so CA clicked on that login link to pay some penalty or some XYZ amount, and as a result, the money got lost. Now, this is the another case where during July season, the tax filing peak season, one of the CA used free tool to extract data from document, and ransomware got his way through that conversion and the download of the file. His systems and all files got locked, demanding high ransom to decrypt the files to access the data over the laptops and network. So time was less, and it would take us time to decrypt the file so that CA, that partner, had to pay the amount to save himself and meet compliance deadlines. So this was a sad reality that we were not able to decrypt those files within a time, and CA had to pay the ransom. The another example where cyber attacks recently surfaced in news, where many consultants, this is not only about CS, this is about accounting firms globally, including India, where their data were found on dark web for sale, their clients' data. And common cause was leakage was unsecured cloud-based tools or sharing data over personal devices through WhatsApp and Telegrams due to remote work and using public-facing Wi-Fi's and all those things. And the victims were not aware by the time they were not aware till this news these details came into a news. So this was also a sad reality in that case. So now let's discuss that where cyber risk lies in a CA practice, that what should we look at, where to find a cyber risk and how to solve it through minimal organizational changes or through putting some policies, implementing some softwares or some tools. So now I'll give you a few seconds to answer to these questions, that how many reuses passwords, how many of us click links very quickly without verifying the details of emails and the source. How many of us have tested backups at our organizations? Okay, so you must have answered this to yourself. So, this is risk now. Let's simplify what are the risky parts in operations which may cause cyber risk. So, when we talk about risk in CA firms, most people think of hacking, but in reality, the risk exists where people, process, and technology interact. Starting with technology, risk sits in the laptops of partners, professionals, and articles. Like if we have lost some device, or we have some misconfigurations into the systems, or we have downloaded some correct softwares and many malwares, ransomwares, or any kind of malicious objects gets away through those softwares into our system, and whether it makes our system slow or takes some data without our notices. Same goes with the free online tools, unsecure cloud accounting platforms. These are far common risk than sophisticated cyber attacks. Even basic email misconfiguration can expose our client data. Then comes the processes. Remote working without clear rules, sharing client documents over WhatsApp, weak data handling practices, irregular backups, and no disaster recovery planning all quietly increases risk over time. These are not technology failures. These are process gaps, if we, name it. But the biggest risk sits with the people. So according to the DSCI analysis of whatever cyber frauds or cyber criminals or cyber crime happening into across the globe, around 34% of these frauds or crimes is due to the human. So whether a human has clicked on a link, or they have uh, used the public facing Wi-Fi's, or they have connected the USB to the railway sockets, or these small things, these small gaps make a large difference into this area. So coming to our topic, that articles and staff often have the highest level of accesses but the lowest awareness of persisting risk. Shared passwords, use of personal laptops, lack of access revocations when someone exits, and insufficient trainings are where most breaches actually starts. So most cyber incidents in our firms happen not because of systems are hacked, but because controls are ignored or they are weak. And so if data leaks due to the negligence, the argument I'm not a IT expert or professional will not protect us, right? Regulator expect us reasonable care, not technical perfection. So what will come under this reasonable care? Acceptance of existence of something called cyber risk and preparedness towards it. And if we connect, so we understand that is a professional risk, and we have to connect it with the confidentiality, due care, fiduciary responsibility, and the client trust. So same goes with the security. So in a cyber security, the entire structure depends on the data, the confidentiality of the data, whether we are able to maintain the integrity and the availability of the systems and the data. So before, so where should we start? Like we don't want to spend more on the cybersecurity, because this cybersecurity as a service, it's very expensive, and many of the small CA firms cannot afford it. So at least we could start with the minimum security checklist by ourselves, which we can take care of. So let's start with the technical controls, which we can implement into our systems for data protection. So let's start with the laptops and desktops, which are the biggest risk. So if a laptop is stolen or infected, client data goes with it. So basic controls like endpoint security, full disk encryption, encryption of a data, auto lock, password managers, changing the passwords at regular intervals, and having a unique and strong password, and taking offline backups drastically reduces the risk. These are the simple steps which we can take care or implement into our operations. Next is email, which is the most common entry point for attacks. Phishing emails pretending to be a client or regulators are very common. So we can put a multi-factor authentications and email security to stop most of these attacks immediately. And one more thing which we can do to protect the email spoofing is that we can set up a DNS. So if you Google that how to set up a DNS in your email configurations, you will get a step-by-step list that how to do it. It will take hardly half an hour or 45 minutes for the first timers, but then you can implement into your entire organization. Next is cloud and accounting tool. So it's so into cloud and accounting tools, the major attack happens because of the misconfigurations and excessive accesses. So always use the licensed softwares, and define the rule based accesses, and have a periodic security reviews. This is far more effective than relying on the trust alone. And where firms run the websites or the portals, I would strongly recommend to at least do a VAPT of their web or mobile application at least once a year. And if you have on-premise server, then you should do the one VAPT and patching of bugs into the servers, and always have a backup strategy. Apply this 3-to-1 rule, that have a 3 copies of backups, 2 different medias and 1 offline backup, and test these backups regularly. So most cyber risk in CA firms can be controlled with basic discipline technical measures and not advanced tools. Coming to the process control to build disciplines, so technology alone will not protect us unless it is supported by disciplined processes. So starting with the remote work, today partners, articles and staffs work from home, client size or personal networks. So these home networks are often unsecured. A simple process fix here is enforcing like VPN or secure accesses along with some endpoint checks. This ensures that even if someone works remotely, access to firm data remains controlled and auditable. Then data handling, one of the biggest silent risk. So many a times client documents are casually shared over WhatsApp or personal emails. This breaks confidentiality, audit trail, and legal defensibility. A simple but powerful control is data handling SOP, where staff are allowed to use only approved tools for sharing and storage. This single process can change and reduce the data leakage risk very significantly. About backups, so many of us either don't take backups or never test them if we have it. So backups that don't restore are unless during a ransomware incident. So in this case also we should apply 3-to-1 rule. 3 copies to different media, 1 offline backup, test backup quarterly, and just have a simple incident response plan and disaster recovery plan. If something tomorrow something happens, then we should have a plan that what is to be done, what are the next steps, without getting into a panic mode. So we have spoken about technology and process controls. The As we discussed that around 34% of the cyber crimes happens because of the human factor. So we should train our articles. The solution is very simple and effective, that just have a cyber induction training on day one, followed by short periodic refresher sessions. Equally important is a mandatory exit checklist, so no one accesses or data walks out when someone leaves. Password practices and shared and reused passwords. Password sharing is still very common in our daily practices. One password for every portals, and sharing passwords over emails without any protection. So this creates a silent but serious risk. A password manager combined with 2FA, it eliminates the risk without increasing our workload. Using the personal devices or laptops. So whenever we use or we allow our team to use laptops remotely, we should use it through VPN. And BYOD, bring your own device, should be strictly prohibited, and only firm allocated or business allocated laptops should be used with access controls, role based access only. Yeah, and most breaches are not hacking, they are simple mistakes. So, clicking a link, downloading a file, or taking shortcuts under pressure, the only real solution here is continuous awareness and clear accountability. So, cybersecurity is not about fear or complexity, it's about discipline, awareness, and accountability, built one person at a time. So, how should we implement this into our organization? So, it's a simple framework. So as we use this framework into our risk assessment, we are aware about this: identify, protect, detect, respond, and recover into our risk assessment practice. So similarly, we have to apply this same framework for cyber risk assessments, that we have to identify that where our client data, portals, and devices exist, who has the maximum control. First, identify that. One identification is completed, then how we should protect it. If it's email, we should protect it with the email security. If it's a laptop, we should have endpoint security and the proper configurations in the place. Then if anything happens tomorrow, then how to detect. Then we should have in place email alerts or EDR or access log monitoring if something is happened. How to respond it. For respond, we should have an incident response checklist. And we should, once in a year, we have to exercise that what is in the checklist, and if something happens, are we able to cope up with it within how much time, and recover. So always have a tested backups, so when something happens, our business don't get hampered. And if something happens, then what are the first things we should do if some cyber fraud or ransomware got attacked or something has happened into our organizations. So first of all, disconnect your devices from the internet or any network. Then inform internal lead. Change the credentials immediately. Inform clients if they are impacted, so they can take precautions from their behalf. Preserve the evidences of attacks. If you wanted to do the forensic, that how the attack has happened, then this evidences always helps. So prepared firms panic less, so less panic, more decision making, and you can stand up on your feet in very less time. So we have to start it with our own self. We have to become role models for our clients. We have to so practice what we preach. So if we are secured, we can tell our clients that just do follow these steps, and you also be secured. And we should not be in this myth that no one will attack the small firms. Even the small firms are the biggest targets, because small firm has less security controls, less awareness about the cyber security, and very less legal pushback. So size is not a safety in this case. And in my opinion, this field has a lot of exposure, and our CA colleagues and our CA network, they already have a connects with their clients. So we should explore some of the cybersecurity opportunities in them with them, like IT audits, basic assessments, risk assessments, RBI audits, SEBI audits. We can do that. So for that, we have our DISA course organized by ICAI. We should have we should develop some cyber literacy, IT control understanding, asking right questions, that what should be done at this time. This will help us in long run. And putting antivirus is not a cyber security. So if an organization or ourselves have ISO certifications, so that doesn't get us certified that no one will attack us. Security is a continuous behavior. It's not a one-time setup. We have to practice and take the precautions every day, every time. So cyber risk is real and personal, and human are the biggest vulnerability. And simple controls prevent the big losses, and we can lead the cyber resilience. So it's not about fear or becoming hackers. It's about becoming prepared professionals. So if anyone wants the 30-day basic cybersecurity implementation plan, then this is my email. You can connect with me, and I will share the 30-day plan, that step by step, day by day, how we can implement the security with the minimal cost. And we have also these services available just for our CA community, that I will check that whether your email is spoofed or not, whether I will be able to send the emails on your behalf or not. And if it's secured, then we are good to go. And if it's not, then you can simply set up a DNS into your email configurations. So thank you so much everyone for your time, and we can have a Q&A session. Any questions, you can please comment in a chat box.
Thank you, Dishita ma'am. This is CA Kavita Jhavar. Let me check if there are some questions and I proceed to the formal vote of thanks. There is one question. In Microsoft domain, proofing is money deducted automatically or CA paid penalty amount?
They have paid it. They had paid it. So the email was legitimate. So Microsoft was just an example. So it happened that CA got email from a GST officer with the alike domain. So say Microsoft just was an example, and it didn't got deducted automatically. CA had pressed on that link, fed all the details, and put the OTP and everything, and then it got deducted.
Okay. Next is what is the meaning of password manager 2FA?
So 2FA is like two-factor authentication. First authentication is a password that if we are, you know, so we are logging into any portal like GST portal, we are putting our ID and password, and after password, not let's not take an example of GST portal in any login page. So if you are putting a password, so password itself is a first level of authentication, and with password we also have to put second level of authentication. Like if email is attached with that login, then OTP comes on email, then we have to put that OTP. So that's a second factor authentication.
So
Like we are
two-step verification, right?
right, correct.
Okay. Uh, there is an acknowledgement from Jigar.
Okay, thank you, Jigar.
Mm, very good information on learning and handling cybersecurity. Thank you very much. And the next question is, in case there is a case of ransomware,
Yeah.
sorry, actually, my
No problem.
in case there is a case of ransomware, should one pay up?
No, so first of all, you shouldn't pay anything upfrontly. First, so whatever message is coming, you have to take a screenshot of that and send it to your cybersecurity expert or a local police station. And also take the file which is got encrypted file with you with the cyber expert. If they are able to decrypt it, then you
Okay.
should take a help of them instead of paying them.
The next question is Google Drive foolproof to data leakage? It is password to FA protected.
Google Files. In Google Files, like generally people do use it, but I personally don't trust Google Drives because it has some configurations which are not very secure, which I feel.
Will static IPs make any sense?
Yeah, they do. They do.
Next question is how to sync mobile app and web access having same password manager.
That I'll come back to you. You can drop their email address if possible, or can share their details. I have to consult that with my technical person.
Okay. Okay. This question is from Jigar Kuvadia. Okay, Mumbai. Okay, I'll share that.
Yeah.
Next question is how much one should rely on browser extensions? Are they reliable?
It depends on which kind of browser extension you are using. Some are reliable, depends on the security measures they are taking. So if you are using any paid browser extensions, then in that case you should ask them whether they have security tested it or not, those extensions.
Okay. Next is thanks from Sarika Mudra. Very nicely articulated the risk. Kudos.
Yeah, thank you so much, Sarika.
And then we have next question. Can data be altered, or is there just the threat of data being stolen?
Yes, it can be altered.
It can
It
be
can be
altered.
altered. Yeah.
Okay.
So usually we undertake VAPT assignments. So in those VAPT assignments, we try to attack any targeted website, and we see that how much accesses we can get. And if we are able to get accesses, we also try that whether can we alter the data of there or not. So yes, we can alter the data.
Same question, same type of question. Should one rely on browser extensions and any other question is will static IPs make any sense?
Yeah, same. So browser extension,
Same.
it varies. It always varies from extension to extension. Yeah, that what's its use and how it's being treated into your laptop.
What is the option to Google Drive? As you said, Google Drive are not safe also. Then what
Yeah,
is the
so
option? What's
I take the paid version of Google Drives, and just check the configurations over there. That what type of configurations are there. You have to just tweak some configurations to make it more secure.
is Apple Password Manager foolproof?
So nothing is foolproof till date. As I mentioned, that security is a continuous process.
Okay,
We
yes.
cannot say that any particular apps or extension or softwares are foolproof or security proof. We can give assurance that as we give
Mhm.
assurance to our clients in audit that yeah, today I have checked as per my best knowledge. For me, it's secure, but there is no
Mm.
guarantee that it's 100% secure. There is always
Mhm.
a
Sure.
risk, and there is always a new methods evolving
Mhm.
to
Mhm.
attack it.
Mhm. The hackers always find ways to tackle new things. And
Yeah,
we as chartered accountants are the way we handle laws,
yeah,
uh,
correct.
loopholes in laws,
Loopholes. Yeah,
loopholes. So it is the same way,
it's the same. It's the same thing.
same way, same story, ongoing
But it
story.
always, we can always minimize this risk.
Minimize, yes,
Yeah.
yes, yes. And I think that we should take care, like in
Yes.
today's world.
Yeah.
So I think not further questions.
Hmm.
So let me put a formal vote of thanks. I sincerely thank Dishita ma'am for the insightful session on cyber risk and CA practice, which has greatly enhanced our awareness of cybersecurity challenges faced by our profession today. And it was really nice to have you, ma'am. And I think lot many questions were put up because everybody is under a threat that like how the data gets leaked.
Yeah.
And since we are working on different portals, as you said, GST, income tax, Google, mails, and everything. So definitely there is a risk, but again, we have to be
Ye-
cautious
Correct.
in
So
handling it.
here just I'll give you one example, and you guys also check whether your email. So we always put at various pages our emails for signing up some for some pages or some details. So from those websites also it got hacked our data.
Mhm.
So there is
Mhm.
one website. I'll just show a quick demo over here. So there is this website of Have I Been Born. Here we can put our email address and check that where our data has been leaked till date. I'll just put my email.
Mhm.
So there is zero breaches for this email because this is very secure email. I'll put my Gmail. So my data got leaked, I think 3 4 times through this email. See, 4 breaches,
Mm.
and you
So
can
which is
also see the
okay.
details. You can also see the details that from where it got breached. So in April 2025, so
Mm.
synthetic credential stuffing threat data. From this, it
Oh.
got leaked in November 20. Sit 0 day. So compromised data was email and password. So in this case, always change the password.
Mm-hmm.
And remove all the devices from your login. Then in 2020, Nitro got hacked and my email name and password was got leaked. So same in June 2020, Wattpad was attacked, and in that a lot of these details got leaked.
Oh,
And my request is to all CFM that whenever you are using Gmail as your domain for email for your official purposes, always check the configuration and always set up DNS. So
there
yeah,
is
this was one
one
example.
more question. I think people,
Yeah.
yes. Sometimes we have to disable real-time scanning to facilitate opening of a file. How safe is this?
Pardon me, can you please repeat the question again?
Sometimes we have to disable real-time scanning to facilitate opening of a file. How safe is this?
It varies. It varies case to case. So generally it's safe, but it always varies. There is no one yes or no answer that how safe it
Mhm.
is. It's depending on situation. So I have I was excited to share another one demo, but I don't think that will be legal to share it over here. So I was just one of our client, it's a CFO only. So we are having one engagement of ISO certification, ISO 27001, and I was just doing pre-scoping details that what will be our effort for this kind of commercial, and we just check their emails over which was over websites. And that email, so I just took for example, the email is xyz at uh, cafm.com. I checked
Mhm.
that email. I tried to spoof it, and I was able to send email from that account to myself.
Okay.
Yeah. And so I don't have any malicious intent. Otherwise, I could have sent an email to their accounts team. Then please transfer me 10 lakh rupees. So I immediately connected with them and told them that please do all these configurations to make it your
Uh,
email more secure.
More secure. Right, right, right. Uh, ICAI CMP portal offers quick heal total security. Is it reliable
Yeah, yeah, it
antivirus, or
is.
you suggest
It
some
it
any better?
it is reliable, but I'll suggest that don't only rely on antivirus software. Just have basic checks, basic endpoint checks and securities also with antivirus. It's always helpful.
So you mean to say even after installing antivirus, you have to be a little cautious in doing
Yes,
that.
yes, we have to.
I think that's what we have for today. Thank you once again, ma'am,
Thank you
for
so much.
such an insightful session. I thank on behalf of everyone. And I also thank everyone to contribute for the success of this program. With this, I formally conclude the session. Thank you, ma'am.
Yeah, thank you so much. Thank you so much,
Thank
Kavita
you.
ji. Thank you, everyone. Have a nice
Thank you,
day.
Dishita, ma'am. Thank you. Have a nice day. Bye-bye. Thank you.
Yes, sir.